Today I'm talking about 11 companies scheduled to go public this week, 2 of them by way of a direct listing. And those 2 just happened to headline the week. Their names, Asana and Palantir. Let's get settled in as we prepare to talk IPOs for the week of September 28th, 2020. Welcome to IPO This Week, where each and every week we talk about all the companies going public, as well as the lockup and notable quiet period expirations. My name is Kevin, and I want to thank you for checking again for this week's episode. As you may have noticed, last week was a little quiet on the channel, but there was a reason for that, as my grandfather, who I was very close with, passed away. I still was able to get last week's episode out, and I tried to answer everyone's comments last week as best I could, but if I missed anybody, I apologize. Unfortunately, and I'm sure understandably, I was not able to get a second video out during the week, but I'm looking to get back on track this week. And we do have a busy week, as we have 9 traditional IPOs and the 2 direct listings of Asana and Palantir to talk about. And there's a lot of variety to these companies, including an international flair to many of them, so I apologize in advance for any pronunciation issues. So let's just jump right into it. First up, we have a Danish late-stage rare disease biotech named Orphazyme, ticker ORPH. The company's candidate is in development for Niemann-Pick disease type C, or NPC. NPC is a rare progressive genetic disorder characterized by an inability of the body to transport cholesterol and other fatty substances inside of the cells. This then leads to the abnormal accumulation of these substances within various tissues of the body, including brain tissue. The company received FDA acceptance on a priority review basis and expects the FDA to complete its review of the Phase 3 results for the treatment of NPC by March of 2021. The lead candidate is also being studied for treatment of amyotrophic lateral sclerosis, or ALS, which is commonly known as Lou Gehrig's disease. As someone who has treated patients with ALS, I can tell you it's a devastating disease as it attacks the nerve cells responsible for controlling voluntary muscle movement like chewing, walking, and talking. The disease is progressive and there is no cure, and usually what happens is that your muscles that control your breathing fail, leading to death. Just a nasty disease that usually attacks men more than women and often strikes between the ages of 40 and 60. According to a 2019 market research report by Grandview Research, the larger global market for ALS is forecasted to reach $886 million by 2026. The company looks to price its IPO on Monday at $13.13, with trading to begin on Tuesday. Next up, we have the largest traditional IPO of the week, Chinese data center operator Chindata Group Holdings, ticker CD, who plans to raise $500 million at a $4.5 billion market cap. The company was founded to develop state-of-the-art hyperscale computing data centers for organizations in China and Greater Asia. As of June 30th, 2020, the company had 9 data centers in service and another 6 data centers under construction, with a footprint covering China, Malaysia, and India. The company counts ByteDance as a customer, which accounted for 81.6% of its total revenue in the first half of 2020. Obviously, it's important for them not to lose ByteDance and the revenue they bring with them. According to a 2020 market research report by Research and Markets, the Chinese market for data center services was valued at an estimated $13 billion in 2019 and is expected to exceed $36 billion by 2025, representing a very strong compound annual growth rate of 19.2%. The company has generated strong revenue growth and an increased profit and gross margin. The company is looking to price between $11.50 and $13.50 and using 70% of the proceeds for development and construction of new data center projects. The IPO is scheduled for Tuesday the 29th, with trading set for the next day. Next, we have Dubai-based company named Yalla Group, symbol YALA. Yalla is the largest voice-centric social networking and entertainment platform in the Middle East and North Africa region. So when I say voice-centric, I'm talking about something like voice chat versus just typewritten text. The company also offers online games and gift exchange. Yalla's app can be downloaded through Apple and Google's platforms. Although focused on the Middle East and Northern Africa, they still have to compete with the more internationally well-known names such as Facebook, TikTok, and Twitter. But even with that competition, Yalla had approximately 12.5 million monthly user visits and 5.4 million paying users in the second quarter of 2020. The company has demonstrated accelerating growth and profitability with strong free cash flow generation. As of this recording, we expect the IPO on Tuesday, with pricing set between $7 and $9, with trading to begin on Wednesday. Keeping up with the international theme so far, we go back to China, where we have Shanghai-based pet-focused online retailer Boqii Holding, ticker BQ. The company is the country's largest pet-focused e-commerce platform and online community and counts approximately 23 million registered users as of the end of last year. The company engages with potential users through shopping, content, social media, and offline events. Additionally, the site offers pet product sellers online distribution through its online social network, so the company is trying to be much more innovative than a store that just sells pet-related products. According to a 2019 market research report by Frost & Sullivan, the Chinese market for pet products and services is estimated to grow at a multiple of 2.7 times by 2023. Following a decline in revenue in its latest fiscal year, growth turned positive in the most recent quarter, although gross margin declined and operating loss widened. The company is also using more cash in its operations. The company looks for its IPO on September 30th, with trading to begin on Thursday. Next, we have California-based Mission Produce, ticker AVO, a leading supplier of fresh avocados. Mission produces avocados on its own land as well as sources avocados from third-party growers in order to provide customers with a year-round supply. The company serves retail, wholesale, and food service customers in over 25 countries and has long-standing client relationships with the majority of its top 10 customers for last year having been customers for over 20 years. According to a 2020 market research report, the global market for avocados is expected to grow from an estimated $14 billion in 2020 to $19 billion by 2027, a forecasted compound annual growth rate of 4.8%. While the U.S. leads in avocado consumption, growth in China is expected at a higher rate of 7.4%. The company's IPO is set for Wednesday, with pricing expected to come within a range of $15 to $17, with trading then beginning on Thursday. Moving along, but staying in the state of California, we have Pulmonx, with a cleverly selected ticker, LUNG, set to go public this week, with the company planning to raise $100 million at a $518 million market cap. The company's Zephyr valve is a treatment device for severe emphysema. Emphysema is a form of COPD, or chronic obstructive pulmonary disease, and accounts for approximately 25% of all COPD patients. The condition is a debilitating and life-threatening disease that progressively destroys lung tissue, resulting in a diminishing ability to breathe and engage in the most basic of daily activities, leading to a high mortality rate. Pulmonx received pre-market approval for the Zephyr valve in 2018 and is now commercially available in more than 25 countries, delivering over 80,000 valves used to treat more than 20,000 patients through June 30th of 2020. Management believes its current market size is 500,000 patients in the US and 700,000 additional patients in certain international markets. As far as financials, the pandemic has negatively impacted the company, with revenue having contracted in the first half of this year compared to the same time period in 2019. However, according to a 2019 market research report by Global Data, the market for COPD treatments is expected to grow from $9.9 billion in 2019 to $14.1 billion by 2025, a forecasted growth rate of 42%. The expected growth is attributed to an increase in the number of efficacy of drug treatments as well as the aging of the world's smoking population, with a growing incidence of disease. The company, like many companies, needs to move past the struggles with the virus to address the market opportunity and improve on its financials. Pulmonx is set for pricing of its IPO on Wednesday, expected in a range of $14 to $16, with trading to begin on Thursday. Let's move on to Texas-based retailer Academy Sports and Outdoors, ticker symbol ASO. The company was founded in 1938 and is one of the leading full-line sporting goods and outdoor recreation retailers in the U.S. The company currently has 259 stores in 16 states located in the southern part of the country. The company also operates 3 distribution centers and sells online through its e-commerce platform, which contributed 11% of the company's sales in the first half of 2020. According to a 2016 market research report by Grandview Research, the global sports equipment market was an estimated $66 billion in 2016 and is expected to grow at a compound annual growth rate of 3.5% through 2025. Academy accounts Dick's Sporting Goods, Bass Pro Shops, Walmart, and Target as some of its competitors. Recent financial performance shows growing operating profit, operating margin, and net income. Empowered by $5.3 billion in sales over the 12 months ended August 1st, revenue rose 19% to $2.7 billion in the first half of the current fiscal year. Academy's IPO is anticipated for Thursday, October 1st, with pricing expected to come in between $15 and $17. Trading will then begin on Friday. Up next, we have a Pennsylvania-based preclinical oncology biotech named Immunome, ticker IMNM, who plans to raise $30 million at a $126 million market cap. The company was founded to develop antibody therapeutics with a primary focus on cancer treatments. However, in the year 2020, what else would they do but also expanded to developing antibodies for the virus behind the pandemic? The company's lead candidate, IMMONC01, is looking to treat a variety of cancers by focusing on interleukin-38, a small protein which appears to function as a novel immune checkpoint inhibitor. As to which types of cancers the treatment is for wasn't clear. The The company expects to file an IND for their candidate in the second half of next year upon successful completion of its preclinical evaluation. As I always mention, biotechs at this stage don't have any revenue and are at best years away from bringing anything to market, and Immunome is no exception. I haven't nailed down an IPO date, but indications are that it could be on October 1st, with pricing to come within a range of $11 to $13 and begin to trade on Friday. Quickly back to China, we have education services provider Lixiang Education, ticker LXEH, who plans to raise $33 million and a market cap of $133 million. I don't have a lot for you on this one, but the company is one of the 10 largest primary and secondary education providers in the Zhejiang province with over 4,500 students enrolled. The company has revenues of $21.9 million and net income of $6.8 million in the most recent 12-month reporting period. They look to have their IPO this week, and that could come as soon as Tuesday with trading on Wednesday. Pricing is expected to come in between $9 and $11. So that's the traditional IPOs for the week. But the two biggest names aren't coming to the market in the traditional way. Instead, they're going with a direct listing, meaning there are no underwriters, and although recent rules have changed on this, the companies aren't looking to raise any capital with new shares. Instead, they will allow existing shareholders to now have the opportunity to trade their shares on the public market. First up, we have Palantir, ticker PLTR. Now, if you've previously been on the channel, you know I've talked a lot about this company, so there's not much new I can share at this point. I have a playlist of videos that I've made on the company, and then just last night, I released a comprehensive video on the company with almost 20 minutes of information on the background, the controversy, the financials, the valuation, and also some of my own personal thoughts on Palantir. So if you're interested in the company, definitely check it out. I'll link it in the description for you. For today, I'll give you an overview and the trading information. Palantir is a data analytics company that was initially founded in 2003 to build software for U.S. intelligence agencies for counterintelligence purposes, with their ultimate aim being to reduce terrorism while attempting to preserve civil liberties. The company has been widely reported to have helped the U.S. in finding Osama bin Laden. The company has since expanded outside of the government market and now offers their services to commercial customers such as Airbus and BP. They have evolved their service offerings to just two platforms. The first is named Gotham. It was constructed for analysts at defense and intelligence agencies for their government customers. For their commercial customers, they have their second platform named Foundry, whose focus is to transform the ways in which organizations interact with information by creating a central operating system for their data. From a financial perspective, Palantir reported revenue of $742.5 million in 2019, up 25% from the previous year, and that came alongside a net loss of $580 million. In the prior year, its sales were $595.4 million with a net loss of also $580 million. The company makes a lot of money from each of their customers, which is good because they only have 125 of them. And of those 125, 3 of them account for almost a third of the total revenue, which could become a problem if they were to lose any one of those customers. While revenue has been growing and the company is now estimating to bring in over $1 billion in 2020, it is worth remembering that the company has yet to turn a profit since its founding in 2003. To keep this video from being too long, and considering that many of you have already seen my other videos, I won't go into some of the controversial aspects of the filing, but again, that is all covered in the video I released yesterday. Palantir's last amended filing had the company expected to begin trading on Tuesday, but there are indications that it will instead begin trading on Wednesday. I'll keep everyone updated as I get further confirmation. As a reference point of where the stock might trade at, based on recent highs of trading in the private markets, we're going to look for the stock to begin trading around $11.50. Okay, and then last but certainly not least, we have Asana, who will trade under the ticker ASAN. Asana is a work management platform that helps teams orchestrate work from daily tasks to cross-functional strategic initiatives. The company was established by Facebook co-founder Dustin Moskovitz in 2008. Over 82,000 paying customers use Asana as of July 31st of this year. The platform's purpose is to add structure to unstructured work, creating clarity, transparency, and accountability to everyone within an organization, individuals, team leads, and executives, so that they understand exactly who is doing what and by when. According to the company, their system collects and structures institutional knowledge about how past work was completed and provides a real-time plan and roadmap for current and future initiatives. They call this their work graph. The work graph captures and associates units of work, which includes tasks, projects, milestones, portfolios, and goals, with the people responsible for executing those units of work, and then applies the processes in which work gets done with rules and templates. Information about that work is available in files, comments, status, and metadata. Asana has experienced strong growth in recent reporting periods. Revenues were $76.8 million in fiscal year 2019 and almost doubling to $142.6 million in fiscal year 2020. And there should be more growth to come, as according to a 2019 market research report by Markets and Markets, the global market for enterprise collaboration was an estimated $31 billion in 2019 and is expected to reach $48.1 billion by 2024, representing a forecasted compound annual growth rate of 9.2%. Competition in the market comes from companies such as Slack and Microsoft. Now, while revenue almost doubled, net losses actually more than doubled, with a loss of $50.9 million in 2019, growing to a loss of $118.6 million in 2020. Much of that is a result of high operating expenses in sales and marketing and research and development costs. Over the past 2 years, quarterly gross margins have grown from 78% in April of 2018 up to 87% in July of 2020. The company looks to hit the public market on Wednesday, September 30th. Unlike Palantir, who has chosen to lock up approximately 80% of their shares, there are no lockup agreements for Asana. This scenario could result in a lot of volatility in the price. Speaking of the share price, being that there are no underwriters in a direct listing, there is no pricing range set as you would expect to see with a traditional IPO. Based on recent trading of their stock in the private markets, the low and high sales price per share of their stock during the period from February 1st, 2020 through August 31st, 2020 was $13.14 up to $28. For some other numbers that might help you decide on a fair share price, Asana's valuation at its most recent private financing in 2018 was about $1.5 billion. But through this year, the company has been reported to be valued in the $5 billion range. Of course, give that a bump because of it now becoming a public company, and you could see it being traded at a valuation of a $6 to $7 billion range or more, considering how tech IPOs have performed on their first days of hitting the market. So there you go. All the new companies expected to begin trading this week. Let me know which ones you'll be looking to possibly buy in the comments section. Before we wrap this episode up, let's take a look at companies with locked up shares expiring. For this week, we have two: YMI Hologram Cloud WIMI expiring on the 28th, and Zentalis Pharmaceuticals ZNTL on the 29th. And then I'll add a notable quiet period ended for pain reform, ticker PRFX, which happens on the 28th, so we'll see what research reports come out on them. So another long episode this month. If you made it this far into the video, nice job for hanging in there with me. If you enjoy hearing about all the companies going public each week, please remember to let me know with either a comment or simply by pressing that like button. And if you're new to the channel, thanks for checking it out, and I want to formally invite you to join the community. After all, it's free. You just got to hit that red subscribe button. And with that, let's wrap it here. Thank you for watching, and until next time, have a great day.